situation. And so generally, contractual obligations should be in the first instance, contracts would be hopefully included in the budget so that the appropriation for the contract would come out of the proposed operating budget. Sometimes the question with contracts is multi-year contracts, so the select board signs a multiple year agreement for a service, for the copy machine, for IT services, and technically the town meeting only votes on 1 year budget. So technically the voters don't, the select board can't just assume that into the future they can spend that money for that contract going on, so forth and so on. But typically what happens with those agreements is you would include the amount for that contract in the operating budget, and you would simply include it every year going forward, and you would have to be able to find the money to meet that contractual obligation each year, because technically the voters haven't approved 3 years from now that you spent that money.
Thank you, because I've been confused about that,
Yeah.
and that's kind of what we do. So our copy contract,
Does it have will they generally
has some
agree to an escape clause?
we try to put in an escape clause. So each year it's just that annual obligation.
Yeah, and there's sort of different ways to do it. I mean, no one wants to put every single multi-year agreement in a separate warrant article.
Because some of them are like $5,000.
Exactly. So no one wants to have the copy agreement and the the IT agreement, and because what you technically could do is do what you do with collective bargaining agreements. You could say to see if the town will raise and appropriate $10,000 for a 3-year contract with the copy people with the estimated cost of each year being X amount of dollars. You could technically put it to the voters that way, and if they vote to adopt it, then they've adopted all of those appropriations into the future years. But no one wants to be in a position where tiny contracts like that are all done by separate warrant article. So typically what you're doing is the select board is signing an agreement, and hopefully they're willing to put contingent language that says that if the appropriation isn't made by the voters in any subsequent year of the agreement, that you would be able to get out of it. But typically what we're seeing is you would sign that agreement year one, you'd put that appropriation into the operating budget, and then you'd put it into future operating budgets, and the money would simply be available in the budget. The big thing to be aware of, really the only one that DRA really seems to care about, is lease purchase agreements. So lease purchase agreements where there is not an escape clause, meaning you are obligated, you sign it, you're obligated to pay out the full multiple year term of the lease purchase agreement. You've got to put that in a separate warrant article, and it's got to pass by a 2/3 vote by the voters. But that's a specific type of scenario where it's really a lot like debt, because and you're obligating yourself to a long-term lease, which would ultimately end with you purchasing the equipment. So it's like it's like payments towards purchasing. So really that's the one that DRA cares about, is that if you're going to enter into a lease purchase for a piece of equipment, you do that right, you put it in a separate warrant article. Okay, other exceptions to the rule about only spending what's been appropriated by the voters. 32 section 13, since you're a March town meeting with a regular, standard budget year, you know that your budget starts in January, but you don't appropriate it until March. And so what you're authorized to do under 3213 is for that weird period of time where you have no budget, when you're waiting for your budget to be appropriated, you are supposed to do your best to make expenditures consistent with the same time last year. And it's not a time to go, wild with spending money down. It's a time to be consistent until you get your budget and you know what you're actually dealing with appropriation wise. Other exceptions, the town meeting probably has voted to give the select board authority to accept unanticipated revenue, like grant money.
We can accept grant money,
Yep,
yes.
accept, expend, apply for, accept, and expend unanticipated revenue.
I don't know about the expend part.
Well, it's one statute, so if they voted to adopt 31:95B, that would give the select board the authority to apply for, accept, and expend unanticipated revenue. So it's worth looking at. That would be in your DRA permanent file.
Okay.
Capital reserve funds, trust funds, you can spend from those if you've got agents to expend. You don't need an appropriation that budget year as long as there were agents to expend. And then we've already talked about multi-year agreements, but there are other types of funds like that. So for example, the Conservation Commission, the Conservation Fund, if you have a Conservation Commission, they're allowed to put money into their fund, it doesn't lapse, it just keeps accumulating, and the Conservation Commission can spend money from that fund throughout the year without needing an appropriation. So the revolving fund, let's say you have a recreation revolving fund and fees go into the revolving fund, you can spend from that fund without needing to go to the voters for an appropriation. So that's some of the benefit of pre-established funds that give a particular agent the authority to spend, is that you don't have to wait until town meeting and you can spend throughout the year to meet the needs of the municipality. I've touched upon the rule of lapse already, and I think you're probably all pretty familiar with the reality that if you don't spend your money that's been appropriated by the end of the budget year, it does what's called lapse. And the way I like to think of it is that it loses its permission to be spent. Okay, so the appropriation was for the budget year and not beyond that, with exceptions. You know, we've got our non-lapsing funds, we've got our warrant articles that may be for longer periods of time, but the general rule is you don't spend it, you lose your permission to spend it. And say you've got this pot of money that's sitting in the general fund that was from last year but wasn't expended, you have to actually ask the voters in this budget year to appropriate that or reappropriate it, depending on what you're thinking, how you think of it, to spend it for new purposes for this year. And sometimes that's a really good thing. I mean, if you've shown that, you know, you were really wise in your spending and you do have money from last year and that you're using that, you're appropriating that money for purposes for this year, they feel like, you know, they already paid those taxes and so they feel like it's found money, I suppose. Although it's really not, because they already appropriated it. It's just that it was appropriated last year. Other than appropriating it for new purposes for this year, you have the ability to retain a certain portion in your fund balance, and there are recommendations. General finance guidelines recommend that municipalities retain 5 to 15% of regular general fund operating revenues, or 8% to 17% of regular general fund operating expenditures, so that there's some retained fund balance sitting there and it's not nothing. Aside from that, you also have the ability to vote to use it to reduce the tax rate. That's another authority that the select board has with regard to fund balance. Again, we've talked about exceptions to the lapse rule, like special articles that have been designated for a period of time not to lapse. The select board voting to extend the period of time for a special article out 1 year. Bond monies don't lapse. They exist for the period of time for which you're doing the project. Capital appropriations, so multi-year capital appropriations, those don't lapse. So there are certain exceptions to the rule, and of course any money put into a fund like a capital reserve fund or a revolving fund, that money's not going to lapse. It's going to continue to remain in the fund until it has been spent. One other way that money is not lapsing is if it's contractually obligated to be spent before the end of the budget year. So the most sort of remedial example of this is that, let's say a purchase order is made for a particular, for recreation, for equipment for the recreation department. The purchase order is made, so you've made the order, so there's a contractual obligation to pay it, but it just hasn't been paid yet. If that occurs before the end of the budget year, whatever the money is that's necessary to fulfill that purchase order has been contractually obligated and would not lapse into the general fund just because you didn't pay it out before the end of the year. But there does really need to be a legal obligation such that the other party could, you know, bring you to court and say that you have to pay on this contract.
But, so our auditor, we've had purchase orders.
Yep.
Near the end of the budget year, and the invoice, you know, the board has approved it, we've ordered it, but we don't get the invoice till like the end of January.
Yep.
Sometimes our auditor doesn't wanna put that expense back in in the prior year. To which we go, because,
Right.
you know, we're now taking money out of our new budget.
Which you hadn't planned for,
which
you hadn't
we
budgeted
hadn't
for.
planned for.
Yeah, and I guess, you know, not being an auditor, I guess I do understand where they're coming from with that, but under budget law, if you were contractually obligated to spend it before the budget year ended, then it really belongs in that budget.
We've gotten savvier, so
Okay.
we make sure that he knows.
Yep.
He's got a list of them, so I
Yes,
think Caroline,
so
it's
it's
true
not,
that
it's not a surprise,
we've had a
yes.
better luck with it.
Yep.
Does it have to be an item in the budget that is isolated in there just for that purpose? Or can it be any item in the budget?
No, as long as you've got the funds to spend it and it's appropriate purpose to spend the money, as long as you've got that contractual obligation, then it goes to last year's budget year.
Okay.
So this is just encumbering that money,
Essentially, that's what it is, it's a
Right.
contractual encumbrance.
okay.
Yep.
So we as a town just need to say we have these bills that were authorized this year.
Correct.
They have not come due yet, so we're gonna encumber them magically, somehow designate them to be paid for out of last year's budget.
There's gotta be a contractual obligation, so it
Right.
can't just be the select board saying, we'd like to set
Okay.
aside this money and encumber it. It has to be that another party could call
Could
you to
make a
task
claim
for
to it.
not paying.
Okay.
Yep.
Got it.
So
Thank you.
budget committee members who have been on the budget committee, you may remember that last year, we had that section at the bottom that for purchase orders and contractual agreements that we had made in the prior year, that we made in the prior year that were paid for in the current year, but they didn't come out of the current year funds, so we put them down at the bottom. And they were like, one was professional services, a contractual agreement with an engineering firm, I think. So that's what
Yep.
we are doing now, so that you can see that we spent it in this year, the obligation had occurred in the
Yes.
prior year. And again, we're just being savvier about
I
all these
agree.
things with our auditor and making sure that everybody is, understands.
Because if your auditor can't trace it back to a contractual obligation, they're not gonna like you saying that it really goes
Oh
with
no,
last
we need
year's
the
budget.
PO,
Yes.
we need the contract. and-
agreed.
Yep.
Yep, agreed. So, key concept number 6 is transfer, which we really already talked a lot about. The statute that enables the select board to make the transfers is 32, section 10. We've already talked about the fact that special warrant articles, when they're special, they can't transfer money out of them, but you can transfer money into them, so you can spend more for that purpose than was originally planned for, but you can't transfer money out of it. The key to transfer authority, as we've already said, is just bookkeeping, so that it's very clear that you are overexpending a line and underexpending from somewhere else, so that both the budget committee and the public has a sense of where the money comes from. Transfer authority also applies to the no means no rule also applies to transfer authority. So as we already said, with the town hall example, even if you said, oh well, we have extra money in our maintenance line, if the voters said no to that project, then that means no for the year. So it's not just a no to expending, it's also a no to transferring money into something that has been rejected by the voters. So that almost is, even though the voters can't typically restrict how the select board spends the budget, the no means no rule is like one way of restricting expenditures, but it's an all-out no, as opposed to restricting them to expend a certain amount. And then finally, we get to the final concept here, which is budget committee, the official budget committee, and the 10% rule. So in towns without an official budget committee, there is no limit on how much a town can increase the proposed budget above the amount that has been proposed by the town. But in a town with an official budget committee, the idea is that your official budget committee has been tasked with the responsibility of putting together a prudent budget. And so there is a cap as to the amount the voters could increase the budget above what the budget committee has proposed. Now sometimes when I think about this, I think, how many voters really increased the budget this much at town meeting? But again, the idea here is that the budget committee has made a, learned and intelligent decision about what an appropriate budget is. And so while the voters can increase it, they can only do it so much. And the general rule is that the voters cannot increase the total appropriations, so that's operating budget, as well as all those other little separate articles with appropriations. When you add them all up, the voters cannot increase that total amount more than 10% more than what the budget committee recommended. So basically, you have to know what is the total amount recommended by the budget committee, because that is your starting point threshold for calculating the 10% rule. Now, there is some things that are excluded when you're calculating up the total amount recommended by the budget committee. It does not include fixed charges, which is appropriations for principal and interest on bond and notes, mandatory assessments like imposed by the county or state or federal government, and it also excludes cost items that were previously approved by the legislative body. So this is really important, is that you do have to, going into your meeting, going into your deliberative session, somebody needs to know what is the total amount recommended by the budget committee and what is our 10% cap. So if the voters start really making increases they make an increase to the budget and then they start increasing warrant articles, you need to know, and you probably need to be warning the voters that we are getting close to our 10% cap here. And I believe the Department of Revenue has a form for tracking and calculating the 10% amount for the budget committee. That's part of the budget forms.
I think it is.
I've seen it before. Yeah,
yes.
Okay. And that is the best way to do it.
So Margaret,
Yes.
what we're, the sum on which the 10% is based.
Yep.
Is the operating budget.
All the recommended amounts. Yes.
So the operating budget proposed by the official budget
Yep.
committee, as well as the warrant articles that they have recommended.
Correct.
If they have not recommended
It's not part of the
it's not part of
10%.
it.
Right. Exactly.
All right.
So this is really important. The idea being here that the budget committee has taken the time to make the decision about what is a good amount of money, and that the voters can only increase it so much. It does not apply to decreases. So you can't tell the voters you can only decrease the budget 10% less than what we've recommended. They can decrease it as much as they would like at the end of the day. There is an ability, just so you know, in case you're ever in a position to propose a bond article, there is something that is really, really important to know. So if the budget committee does not recommend a bond article, that would be obviously a huge difficulty for the 10% rule. But you, as the select board, have the authority to put a statement on a bond article that passage of the article shall override the 10% limitation. So you can sort of exempt it out even though it's not been recommended by the budget committee.
We passed 3 bond warrant articles last year, and so there was.
Yes,
Yeah.
but it's
And
really
bond
important to
counsel
put.
and DRA
yes.
is really helpful in
Yes, they are.
telling us how to put that in place.
Correct. So the final point, we've already talked quite a bit about reserve funds and other types of funds, but I just want to sort of make a point that these are, you appropriate money into them, but if you have agents to expend, then the expenditures are not made via the town meeting, they're made by whoever it is who has the authority to spend money. So reserve funds are really just like savings accounts, again, for a particular purpose. They're like planning ahead to do bigger projects in town. The capital reserve fund is for those big capital projects, the construction or the acquisition of land or other large, huge pieces of equipment. But as we talked about, non-capital reserve funds are a great way of putting aside money to anticipate other big expenses that are not capital in nature. And so, little money each year via a warrant article into those funds can really offset, can create later on you not needing to put a huge increase into the operating budget to cover some expense. Expendable trust funds are really sort of the same animal. They're savings accounts, and you're allowed to put money away for any appropriate purpose for which a municipality has the authority to spend. So they're just another way of putting aside money for a particular purpose.
I think we just set one up for the historical committee.
There you go.
Wasn't that an expendable trust fund? I think it was, yeah.
And I've already mentioned, other types of funds here, and I have them here on this screen. Especially revolving funds. I mean, special revenue funds are good funds for, basically what the town meeting does is they vote to create a special revenue fund, and they vote to put either revenue from a particular source or a part of revenue from a particular source into this special revenue fund and to sequester it. But the thing about special revenue funds is that they always require a town meeting vote to take money out of them. They are not like capital reserve or trust funds where you can have the voters put agents to expend. They always are going to require a town meeting vote. Revolving funds are great mechanisms for activities that generate fees, for which money is paid for a particular activity, and they are often used for two huge things: police special details revolving funds and recreation revolving funds. So the idea behind a revolving fund is that it's literally a revolving door. Money comes in from a source and money comes out to spend it for that same purpose for which it went in. So in the concept of recreation, you have recreational activities. People pay a fee. The fees go into the revolving fund, and then the money in the revolving fund is used to support the activities for which the town charges fees. So to update the ball field, to buy equipment, to do whatever you need to do with regard to the recreation program. So they are ways of putting aside fees so that the fees can actually self-support the program that the fees are paid for. Revolving funds should really be an in one door, out the other type of thing. They are not supposed to be savings accounts. And if revolving funds have huge surpluses, you probably have a problem, because they are supposed to be, again, in one door, out the other, a self-sustaining fund for the activity for which the fee is collected.
And not a profit making.
And not a profit making. So part of the issue that you'll sometimes see, especially in the context of fees, is if you are charging so much in fees that you can't possibly spend it all to sustain the program you're charging the fee for, it is potentially true that the fee is too large for the purpose for which it's being
And the
collected.
IRS will come knocking on our
It's
door.
potentially true, so it's something to consider. Every once in a while we'll hear, we have a $3 million surplus in our revolving fund, and I'll think that is not the way a revolving fund is supposed to work.
How does the revolving fund get set up? Is that a town meeting?
It's the town meeting votes, the town meeting puts someone on it to be the agents to expend, and by the way, there has to be someone, because the revolving fund, again, is supposed to be throughout the year self-sustaining, and then fees go in. There are ambulance revolving funds, there are police special detail, there are cable access revolving funds, recreation revolving funds, and by the way, as an aside, I think in 2016, it used to be, I think that the statute only allowed revolving funds for police special details, but the statute was amended, and now any public safety activity, you can have a revolving fund for it. So it was opened up to be broader than it used to be, because sometimes the question would be, well, if we have a special detail, can we spend, special detail revolving fund, can we spend the funds in that for any police-related purpose? And really, it's supposed to be money in for that from that activity, money out for that activity. So now it's been more broadly expanded to allow for that as well.
Can I just clarify?
Yes.
Because you said it, but I think we all need to hear it a little bit clearer perhaps, because we have this conversation periodically. So if we were to establish a revolving fund for police detail, you cannot buy a cruiser with that money that is used for any other purpose but just for the detail.
That is my position on it, is that if it is a special detail fund, the money that comes in is supposed to be used to support the special detail, which is usually overtime.
So you can use it on the salaries too.
Exactly, yes. But if it's a cruiser for the department, then it gets more detached from the original purpose for which the money came into the revolving fund.
So-
But now, because you can have a public safety revolving fund for any appropriate purpose, you could just broaden the purpose of your revolving fund and be able to buy that cruiser.
Aha,
So now there's a way to fix that problem.
thank you.
Can you have multiple departments within the same revolving fund? Like for instance, the fire department may have
Yeah.
special